It appears that a deal will be signed in the 11th hour, but it's been a long time coming. I think we all know that and can agree upon that. With so much uncertainty about all of it, investors have been on edge. Jennifer Lukey joins us now live with the real deal on how all of this could impact you and your nest egg. Jen?
Well, Dory, believe it or not, today was a great day for the stock market. Investors started buying this morning when there was talk of a deal, and that continued throughout the day. But there has been a lot of ups and downs over the past several weeks, and that has all of us concerned about what it means for our money long term.
Those of us with investments in 401ks have been watching the back and forth in Washington very closely. And over the last few weeks, annoyance has turned into panic.
They're pretty dramatic, where it's catastrophe, worldwide collapse in the financial markets, collapse in the economy. So naturally, we've been asked lots and lots of questions.
At this point, most local financial advisors are telling clients this.
What I've learned over time is that, yes, the crises are real, and yes, they could lead to they could have a significant impact on the markets as well as the economy, but generally they don't. And that the worst thing you can do is to get caught up in the crisis and make portfolio changes, sell, for example, because you're scared.
That advice holds true, they tell me, even for those of you who have federally backed bonds in your portfolio. And they say it doesn't matter how old you are or how much money. But economists warn that while the market may be fine now, this uncertainty will most certainly be back in a few months.
The fact that they just moved the deadline to early February will ease markets and consumers and investors in the short term, but that's a very, very short-term outlook. The issue is, we've been in a very slow recovery for 4 years. We're still not out of it, and this is just going to prolong how long we're in it. So if this becomes routine, if the debt ceiling becomes a bargaining chip to, ram through programs that you want funded or to ram through funding cuts to programs you don't like, that's going to have serious long-term implications because nobody's going to be able to forecast beyond a year or two.
And that could impact all of us.
The big threat is for consumers who are looking to buy goods on credit, whether it's a new car or a new washing machine, a new refrigerator, or a house. This is certainly going to push up the interest rates on those purchases.
Now, it might seem odd to you that through all of this, investors still aren't shying away from those federally backed bonds. Well, that's because it all comes down to cash. Even if the government was to have reached that debt ceiling, it had cash in reserves, and guess who gets paid first? Bondholders. Live in studio tonight, Jennifer Lukey, CBS 6 News.